little challenging, but we can do it.
Yep.
All right.
And I guess nothing stops you also from just doing two breaks. And then you can do 2 segments with Patti and 1 with me or something like that.
That's true.
Although I think you got a little commercial.
I mean, I usually have the 3 commercials here, but I mean, because you can just go into your stuff and right into the email. And I can even say, Patti will be joining us in the second break as well as our guest.
Okay.
The audience doesn't know.
That's right.
All right, here we go. Welcome. You're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms, and Patti Cohen of Pacific Union Realty. Patti will be with us in the second segment. Our phone number is 888-912-1190. Now use that number to answer the trivia questions for 3 vacations given away during this show. The vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. Those vacations are free. They only request a $75 cleaning fee to cover housekeeping expenses. And today's trivia theme is a little similar to last week. And this one, though, is classic trivia from classic films. Okay?
Hopefully it won't be as hard as last week.
No, last week's was tough.
Struck out on all 3.
Our website is bestofinvesting.com. Check us out on television, Comcast Channel 26, AT&T Channel 99, Saturdays at noon, Sundays at 6 p.m. And also in the next segment, we're going to also have a special guest, Paul Gill of Lomiko Metals, who's going to give us an update because he was on last month, and I think he's got some special, interesting things to talk to us about from his company. It was that special kind of metal, remember?
Oh, right.
Something green.
Right.
He'll tell us in the next segment.
Absolutely.
So, Mark, you've got a few things you want to talk about.
Well, absolutely. I wanted to start out by talking a little bit about a rather shocking headline I saw in my kind of normal blog posts that I tend to read especially for a radio show research here. This one said Americans dipping into retirement savings. It goes on to say 30 million Americans, in fact, withdrew funds from their retirement accounts for emergency reasons last year. Those high numbers point to a need for financial planning, says the article. Well, in addition to maybe some financial planning, because that's always a good thing, is to make sure you're talking with your financial planners and planning for your retirement. What's scary about this is we've been talking for years on The Best of Investing about how in many opinions that most people are just not on track to retire successfully. Now, what does that mean, retiring successfully? Well, in my view, retiring successfully is that you've created a retirement fund, you have a retirement plan, you're adding to that fund, you're investing it in investment vehicles that create annual growth that's above a certain number so that you can actually create earnings from that.
Well, yeah, so your standard of living doesn't have to get dropped too much.
Right. But, given what, the largest segment of baby boomers are now, heading into retirement, and we just went through the so-called lost decade from 2000 to 2010, and yes, the stock market's done great for the last 5 years, but many are still heavily impacted from huge real estate losses and even stock portfolio losses that were suffered through 2008, 2009, 2010. And not everyone went right back into the market again and realized those 150% plus gains that the market grew from the trough of 2009 all the way to this past year.
Well, I wonder how many people thought the market was going to go, let's say, to 25,000, so they ended up buying when it was close to 18,000,
yes,
only to have it go back down to 16 plus thousand.
So even though the market, if you just look at the indexes, and you look at the indexes from the bottom of the market, which I guess was around in 2009, and then through the height of the market earlier this year, had you been in and had you been invested in indexes or mutual funds that tended to track that, well, yeah, your you're probably pretty happy, you're in pretty
Sure.
good shape. But had you gone into bonds or CDs or cash or other types of investments, maybe those haven't fared too well. So, what's my point? What am I looking to talk about this segment? I really want to talk about the alternative investment opportunities that are out there, and I'm talking specifically about a little known. It's practically, in fact, it's called the best kept secret in investing today. We've been talking about it on the Best of Investing for years. So if you've been listening for a while, you know what I'm about to talk about. In fact, I'm talking about mortgage investing. Whether you invest in individual notes or a mortgage fund, that for the last since 2009, mortgage investing has provided some of the best, most predictable, most reliable yields for investors out there. And now that we're in a period where many believe that the stock market may underperform for many years to come, maybe the ride that we've gotten in the last 5 years, that could be it. And we're in October with a very tumultuous month. A lot of people, in fact, we're getting a lot of calls at Pacific Private Money, and we've got, in fact, every time I send a newsletter out showing making the income distribution to our fund members for the prior month, I get a flurry of new checks in there. People are moving money out of stocks or moving money out of CDs.
Where else can you invest in something where basically you act like the bank? And banks are very healthy right now making loans.
Yep, absolutely. And the real estate market now, of course, you may have opinions about are we in a real estate bubble? Is there a danger of a next cycle? Well, let me just tell you, there will absolutely be another real estate cycle. The point of investing in mortgages is to invest in mortgages that are conservative in nature and that will very likely or have a high likelihood of withstanding and maintaining their equity protection during the next downturn. Now, we don't know when the next downturn in real estate prices are going to be here in the Bay Area. And at Pacific Private Money, we make mortgages in Northern California primarily.
And also, you don't know how much of a correction.
Right, we don't know. And in fact, the most conservative correction that I'm hearing, or I should say the one that is the highest pullback that I'm hearing is from a blog that I read that predicts that a 10 to 15% pullback in 2017. Well, that may or may not happen, but if you're invested in mortgages that have a loan to value, a current loan to value of 70% or less, which is our maximum target loan to value at Pacific Private Money, then we are those mortgages are created to withstand a pullback in the market. Now, of course, there's always risk. There's no guarantee. If the borrower stops making payment on your loan, you lose that monthly income. You might have to file foreclosure, or of course we assist in that service.
But you also may get a gain with the value of the property.
Well, if you have to foreclose on the property, you may actually get a gain. So there are things. So people who depend on monthly income and they absolutely need that income, it's not always the best option to invest in a note. Which is why a lot,
but in a fund,
in a fund, right? So at Pacific Private Money, we have a mortgage fund called the Pacific Private Money Fund, and we have been paying out over 8% on an annualized basis in our monthly distributions every month for 26 consecutive months. And past performance, of course, is not a promise of future results. So again, it's not a guarantee, but we have been in this business for a long time. We've made over 1,000 loans. We have a ridiculously low foreclosure rate, and we'd like to believe that's because we do a very strong job at underwriting our loans and our borrowers, and we are the weighted average loan to value in our mortgage fund portfolio right now is under 60%. In fact, I think it's about 55% today. So again, there's options out there, and the point is you really need to be looking at alternative options, and think about what an 8% annualized yield year in and year out in your investment portfolio, in your retirement portfolio. We can take IRA money, by the way, so 401ks and IRAs are eligible, and to be able to allow your investment savings to grow, And again, we're only talking about a we're talking about a diversified portfolio. Now would never suggest that anybody invest most or all of their retirement funds in a mortgage product. However, you should be looking at at a percentage of your portfolio to boost the yield that you earn in your savings.
And it's not even that esoteric. I mean, you actually have a CUSIP number, and you've worked with Fidelity, so it's not like you're some out in the woods type of investment.
No, we're not. And I've been in real estate my entire career. I've lived in Marin County my entire life. I come from a family of real estate investors, so we have an office full of people from banking and mortgage loan origination. So we're not one of those hard money lenders that does seconds that some people think they've heard about or know about or maybe invested in one of those things years ago. The private money loan origination and lending business today is a highly regulated in this new Dodd-Frank era. It's a highly regulated industry. It's legitimate. The only difference between us and the bank is that we have different regulations that govern us, but there's still regulations that protect the borrower and require us to do certain disclosures. But the other thing that really makes us different is that we are like the banker of 50 years ago, where you walk into the bank and you explain your story, and if the story makes sense, we do the deal. And we listen to stories every single day. We're a subjective lender. Now, I don't know a bank today that's a subjective lender.
They're not allowed to be.
Yeah,
you're more like George from It's a Wonderful Life.
Right, you're a collection. When you walk into a bank or you call your mortgage broker, you're a collection of ones and zeros. You're a FICO score, you're a balance sheet, you're a credit history, and you're a W-2, and what does your tax return say? And based on all of that, it doesn't matter who you are, it doesn't matter what your story is, it doesn't matter where the property is or what's the situation or how you're going to pay the loan back. All they really care about is all those ones and zeros, and they stick it into a computer and it spits out a yes or no or give me more information. And it's usually, and unless you're blessed with high income and high FICO, it's usually give me more information. Well, maybe we can make you a loan.
Okay, so here's a good example. Excuse me, of somebody I ran into who, my guess is you could probably help them when the bank could not help them.
Okay.
So this gentleman owns a $3 million house in Tiburon or Sausalito. It's free and clear. He's retired. He wants to downsize. So he wants to move into a place that's $1.2 million. The problem is that his income wouldn't quite give him enough to qualify for $1.2 million house, and he doesn't want to first sell the house and then buy the new one. So here he is, and what's he going to do? The bank says, no, we're not going to lend you the money.
And that's a typical story, and I can't tell you how many people come to Pacific Private Money with stories exactly like that. They're looking to downsize. They're on a fixed income now. They've got maybe millions of dollars of equity in their home, and yet they can't qualify for a loan to buy a home that's smaller and less expensive. Maybe it's a townhome or a condo, for example.
Otherwise, one of the choices is sell your house, go rent a place until you find the house that you want. But he doesn't want to do that.
Right, and many people don't want to do that. So we have a program called the 11-month Bridge Loan Program that's created exactly for that. And what we can do, unlike a bank, we can look at the situation and go, okay, well, he needs help buying the target property, and he's going to pay us back when he sells the existing property. And and he may not even go out and get a bank loan after that. But he can certainly buy the home first, sell the other home, put that money into his savings account, and then get a bank loan, because now he's got a bunch of money in his bank account. Of course, they may make him wait to season it a little bit, but very likely that situation, that story you just explained, that person that within a year, and hopefully sooner, would be able to qualify for a low interest rate mortgage loan and pay off our short-term bridge loan. And because our bridge loans have no prepayment penalty, he can pay it back as soon as he gets bank financing or conventional financing, and he's got the home that he wants, and he didn't have to move twice.
Okay. In fact, this kind of leads into this email question here. Can you please explain cross-collateral to me? How does that work? And I'm wondering if, in this situation, if that borrower came to you, would you necessarily do cross collateral, or would you lend just on the subject
Well,
no.
we've done situations like this story. So again, the story was the guy lives in a home and it's worth maybe around $3 million. It's free and clear. He wants to downsize to $1 million home, but he doesn't have a lot of money in the bank, and he's on a fixed income. Most of his retirement assets are really tied up in the equity in his home. How does he buy that target property for $1 million? Well, we do this all the time. We can actually make him a $1 million loan. In fact, we can make him a $1 million loan plus closing costs. So he really doesn't have to come out of pocket a dime to acquire that target property. And what we'll do is we'll cross collateralize. It's called both properties. So we'll make him one loan, but there'll be a deed of trust that's recorded against both properties because we're looking at the combined value of the two properties. In this situation, it would be $3 million plus $1 million is $4 million worth of real estate, worth of property. That's his equity, and we're going to make him a loan of, let's just say, for argument's sake, $1.1 million. And
sounds like a pretty safe loan.
Yeah, it's 26, 27% loan to value. So why wouldn't we make that loan? Would a bank make that loan? Not in 100 years. They're not set up to make loans that way. It's brain damage. It's just easier for them to say no and wait for the next qualified applicant. But we do those types of deals all the time. We do 100% plus acquisition financing collateralized on 2 or more properties.
Gotcha. And for more information, how do people get a hold of you?
For more information, PacificPrivateMoney.com is our website, PacificPrivateMoney.com. If you want information about how you can earn 8% or more, you can actually get to our fund website from PacificPrivateMoney.com, or just go direct to our fund website, which is PacificMoneyFund.com. That's PacificMoneyFund.com. Both of those websites will give you information about our company. And we're here in the Bay Area. We're at 415-883-2150. Again, 415-883-2150 for Pacific Private Money.
Very good. Okay, we're going to cut to our first commercial break, and here's the trivia question. Again, the theme is classic trivia from classic films. Rebel Without a Cause, a classic teen film from 1955, has a dubious distinction. Only one of the top 4 credited players reached the age of 50. Who lasted the longest? The first caller with the correct answer will win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer that question. Stay with us. You're listening to The Best of Investing, and we will be right back. Okay, cool. That was 17 minutes.
Ooh, record.
Yeah, that's okay.
That's all right. Well, you do 3 short ones.
Yeah, then I'm yes. So what?
I'm so sorry. I'm writing it in like 5th floor or 6th floor.
5th. You know what? We used to be on the 6th floor.
Well, I know,
Yeah.
but I mean, I used to know it all the time, every time.
That's right. Yeah,
All right,
no,
so I'm writing this down.
we-
So
I-
5th
sweet.
floor.
Five
Done that one.
I don't know what's wrong with me.
I
And,
did it last month, went up the wrong floor.
and I'm actually early.
So, Patti, let me introduce you here.
Okay.
On the phone, we have Paul Gill from Lomiko Metals, and Paul has he's got this thing called grafting, which he will explain to us again. Now, he was on in September, but we're having him on again to kind of give us an update. And then what we'll do is I've already recorded, like I said, the first segment with Mark. So what I'm going to do is instead of the welcome you're listening to Best of Investing, it's going to be welcome back. And let me just make sure that
I really do, and tell me what to do, and I'll.
okay. And then we'll get into all the good stuff that you have after. So we're going to have him on for a segment, and then it'll be just you and me after.
Okay.
All right.
Hang on,
Okay.
Snoopy.
And then Paul, you ready? We're just getting Kramer set up with the video. Right? Good.
Hi there.
Hi there.
Oh, I started.
Oh, you
Paul,
got
this is
a note
Patti
on
Cohen.
your pad there.
Yep. Oh, I did. Okay.
Wise guy
Are
here.
you guys ready?
I'm ready.
Are you ready? Okay, here we go. I'm just going to make sure I do this correctly. Okay. Well, welcome back to The Best of Investing. I'm Edward Brown, your host, and Mark had to take off, but we do, of course, have Patti Cohen in here, our other co-host from Pacific Union Realty. Now, Patti, we also have on the phone our guest, Paul Gill from Lomiko Metals. Now, Paul, you weren't on the show before, but last month Paul was on to explain to us his company. And Paul, why don't you explain, because you came up with something called graphene. I think we want to remind the audience what that is, and then you wanted to give us an update.
Sure. Hi, Edward. Hi, Patty.
Hi.
Hi there.
What our company does, Lomiko Metals, is we have got a sub called Lomiko Technologies, and we invest in nanotechnology companies. And the ones we specifically pick out are surrounding this new material called graphene. Now, graphene is 200 times stronger than steel, 1,000 times more conductive than copper, and it's stretching, it can stretch and flex. So it's a really interesting suite of properties that this material has.
What is it made out of, or is that what it's made
Yeah,
out of?
good question. Essentially, graphene is a form of carbon. So it's, as you know, diamonds are a form of carbon, and coal is carbon. It's just about the structure of the atoms that's different. So this particular structure of atoms for graphene creates a hexagon pattern, just like chicken wire. And so if you connect all of these together, it gives super strength to the material, but also stretchability, which is a really odd combination. That's what happens, and also conductivity, because carbon is very conductive.
Yeah, it's almost unbelievable that it stretches and it's that strong. I imagine there's a lot of applications for it.
Yeah, and that's exactly the point. Is that what really got me excited about this material and got me going on it about 2 years ago, researching it, was that there was at that time 6,000 patents filed on graphene, and that got me excited. But what really has got me going now is that as of today, there's over 12,000 patents filed.
How
We're
many?
not talking about mad scientists here. We're talking about Lockheed Martin. We're talking about the U.S. Army that filed patents.
But can you go into those patents for a minute? Because I'm wondering how many different kinds of patents can you have for this one element, call it? I guess they're called utility
very good
patents.
question. So what they're patenting is not the element itself, but the application.
Okay.
So what they've done is they've used graphene. Lockheed Martin, for instance, has used graphene in a filtration device that will allow seawater or any kind of contaminated water to be completely cleaned through a graphene filter, and to the point where you can drink the water.
Wow.
This has got applications all over the world where there's contaminated water.
Wow, amazing.
Yeah, because I mean, I could just see all the third world countries and people camping and can you take seaweed water and do that with it?
Exactly. You
Wow.
can take any kind of water, and you'll be able to do it. Now, of course, it's all in testing and prototyping phase. So this is something that will eventually come out in the next little while.
And then you said your company specifically has how many patents on it?
Yeah, our company directly doesn't have a patent on it, but the company that we've invested in is called Graphene 3D Lab, and they've done something very phenomenal with the material. What they've done is taken this material and combined it with plastic and put it into form that you can print out of a 3D printer. So,
Wow.
as you can probably guess, you have something that a material that is very conductive, very strong, and also flexible. It's hard to create a 2x4 out of this material and then try to make a house. No, what you do is you throw out the whole concept. Take 3D printer and you print whatever you want, exactly the shape you need it in. If you want a bumper on a car, print a bumper on a car, and without any waste, you have this end product.
The thing is, how big a printer do you need for that? Print me a house,
So we can print you a house,
Wow.
no problem, because they've already done that in the Netherlands. 3D printing. So the 3D printing model is all about what you can program with a computer and the size of your printer. It's just like the size of any machinery. You can change the size of machinery. The computer programs it. No machinery doesn't change.
This is even more technologically advanced than Star Trek.
Yeah.
I mean, it's they didn't even think about stuff like this back then.
Here, I'm spending my day talking to
It
people
is
about their
getting
pest
there.
inspection.
It is getting there because really what you're trying to accomplish is taking material that is one shape and converting it into a completely different shape and making it a solid. So it will eventually be a situation where you can materialize objects.
That's so weird. That what that reminds me of is, okay, did you see the movie Terminator 2? Right, with the guy with the liquid that the guy turns himself into liquid and then he turns himself back into a human.
Yeah.
Basically.
A lot of those Hollywood movies are based on some form of scientific postulation. So we really what we look for at Lomiko is something that we think the future is going to be made of, and we think the future is going to be made with graphene related materials. Combining this material with plastic, combining it with other hardening materials, with steel, using it as a coating. That's where we think the future is going. That's why we are invested in all of these graphene companies, and we think that we're going to keep looking for very interesting patents where we have a strategic advantage and help those companies go public.
Have you seen any downside to it? Like if it it'll melt at a certain temperature or it'll freeze at a certain temperature?
Yeah, really the downside right now is whether there's any health effects to the grading of this particular material, whether or not the material will burn, and whether or not the application that you want to use it for, say if you want to use it for the shell of a car, a really lightweight car, you make it out of graphene / plastic. Well, what happens driving down the road and there's a lightning strike, and because it's so conductive, it just flies your car. So you've got to make sure that the application is well thought out and all of the various factors are dealt with, and that's what is taking so long.
Yeah, I can imagine.
To do for some of these companies. They're doing a lot of research. Now, just a one fact that I mentioned before, the 12,000 patents is one thing. Now, in Europe, they're spending 5 billion euros of research dollars on this material. In the States, we probably spent about $3 or $4 billion, and yet no one has heard about it.
Yeah, that's all that I can think of is that the general public, I think, has no idea about it.
Yeah.
And I'm hearing about this thinking, this is like front page news. I would think that, there would be some kind of TV show about it at 60 Minutes or something.
Well, if you ask somebody what graphene is, they'd say that's what you put in the pencil in your lead.
Yeah.
Right?
That's exactly right. I mean, graphite is pencil lead. That's the weirdest part about this, is that it's been there all along. Graphite has been with us, and it's just a lower form of carbon as well. You can take that same material, which is the amazing thing. We're made out of carbon. Carbon is us. This is stuff that we know very well. We've known it all of our existence.
Can you make diamond? Can you make diamonds out of it?
Well, no, because graphene is one form of carbon. Diamond is just another form of carbon. So with pressure, you can make it, cold into diamond. You don't have to worry about making graphene into diamond. But this is a completely separate functioning material, right? Because it has 6 carbon atoms, whereas diamond might have X amount more. And I'm not sure of the scientific science on that, but so it has a specific function, and I think that the most important thing to remember is the conductivity. Imagine graphene chips in computers. Imagine you can take big, huge copper wires that you used to use in your house and reduce them down to, drawing a pencil in light in your light switch.
Well, how
Those are the kinds of things that we're thinking about.
how long do you think before we actually see it come to market?
Well, that's the other beauty of it, is that you're watching right now, and if you watch closely, it's almost like watching a flower bloom very slowly, because there are graphene light bulbs that have been brought to market. There is a graphene tennis racket, which Lomiko actually used. It was the U.S. champion. And he actually endorses the head tennis racket, which is made out of graphene. So the percolating through all of these various systems. And the interesting thing that the thing you can relate it to most is plastic. We don't even think about plastic, but in 1940, 1950, there was no such thing as plastic.
Oh, that's a good
It's
point. Yeah.
starting to get invented, but now it's everywhere, and I think that's where graphene can be compared to, is that the advent of plastic.
Now, your company, it's not publicly traded, is it?
Well, Lomiko Metals is publicly traded. It's
Okay.
traded in the OTCQX under the symbol LMRMF. But what we decided to do is model that company as sort of an investing company that goes and looks at these.
It's like a holding company.
Yeah, it's a holding company. We also have, well, the other side of it is to actually locate the source material, which is high quality slate graphite. And so we've gone to Quebec, Canada, and located the source, and we're trying to prove out the mine itself that has the graphite in it, because that way you can lower your entire cost structure by knowing where you get the raw material from, and then also investing in the end product.
Wow, very cool. So, Paul, we have to cut out here now. If people wanted more information about this, where would they look?
Well, on our website, lomiko.com, LOMIKO.com, we've got a whole research section on graphene, and we have explanations and videos and everything. So, welcome to start there, but Googling the word graphene, GRAPHENE, will amaze you. A lot of stuff to learn.
Great. Paul Gill from Lomiko Metals, thank you so much for joining us on the Best of Investing and giving us an update.
Thanks, Edward.
All right.
Fascinating.
Very, very interesting stuff. Very 21st century stuff.
Very. And it struck me though when he pulled it all together and said, basically, before there was plastic, and you look around, it's everywhere.
Uh-huh.
Before there was plastic, we couldn't imagine all the applications for plastic, and now we take it for granted.
Yeah, exactly. That's a very good example. Okay, so unfortunately, I forgot when we got back from break, we were so fascinated with having Paul on. I forgot to give the trivia question and answer that when we cut off from the last break. So here, the trivia theme is a classic trivia from classic films. And here was the question from the previous commercial break. Rebel Without a Cause, a classic teen film from 1955, has a dubious distinction. Only one of the top 4 credited players reached the age of 50. Who lasted the longest? And the answer was Jim Backus. Remember Thurston Howell III?
Yes.
Because both James Dean, Sal Mineo, and Natalie Wood never lived past the age of 50.
Wow.
Okay, so now we're going to cut to our second commercial break. And here's the trivia question. The star of the classic 60s detective film wanted Robert Vaughn to play opposite him. The film was about a witness protection watch that goes wrong, very wrong. Name the film. All right? First caller with the correct answer wins a free 2-day stay at the Lighthouse Resort. Call 888-912-1190 to answer that question. Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. And don't touch that dial because the best of investing will be right back.
How I forgot we were on the air.
I know. Okay. I know. This is the first time I've ever had to record that and then
It's a
go
little
back.
different today.
Yeah, it's a little different today. All right. So this is going to be considered segment 2.
Golly. So we're actually being shorter today.
Well, it's okay because Mark already kind of.
That's what I mean.
Yeah,
So
there's no
like I'll be
question.
here less time.
Yeah,
Yeah.
that's correct.
Okay, that's all I'm getting to. Good.
Right, Mr. Kramer?
No.
I like your little
Nice.
note, Kramer.
Oh, thank you.
What did it say?
It says hi, Patty.
Oh.
Yeah.
It's cute. Little smiley face.
Someone ought to say hello.
And,
that's right.
and he's calling me.
I mean,
Vera.
no, Ed.
No, but anyway.
Edward does, but Mr. Kramer.
Kramer.
Mr. Kramer's ready.
Okay. All right, and the trivia, or excuse me, the email question we have for you is, how do you think the latest non-move by the Fed regarding interest rates will affect housing prices?
The non.
Because they didn't raise them.
Oh, yeah. I'll take it. I love it.
Okay.
Yeah.
And one thing,
I know exactly what to say.
one thing, not to confuse you, Patty, but it looks good when you look at the camera. Like when Mark does, it looks good.
Or when I'm looking at you.
Yeah, because
And make sure you
because-
get close to the mic too.
Because I'm sort of like.
in radio, no, but it looks good when she does it. It looks good when Mark does it.
Okay.
It
And,
don't look good when I do it.
you do it. It's always a funny face.
Yeah.
Yeah.
Okay,
so
good.
I mean, whenever you feel like it, and you
So
feel
once in a while, I'll
comfortable.
look over to.
The more coaching, the better. Thank you very much.
Yeah.
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 I had to adjust this thing because you started talking way back here, and you go, oh,
I forgot we were on the air.
Yeah. Try, see, that's just good. We try to make it natural. All right, are we ready? All right. Away we go.
Ready, Teddy?
Welcome back to the Best of Investing. Edward Brown here, along with Patti Cohen. When we cut to the second commercial break, we asked this trivia question. This theme is classic trivia from classic films. The star of this classic 1960s detective film wanted Robert Vaughn to play opposite him. The film was about a witness protection watch that goes wrong, very wrong. Name the film. Actually, I didn't like this film. It was Bullet with
Oh,
Steve
Bullet.
With Steve McQueen.
I wasn't allowed
So
to
everyone-
say
you know,
to
it's
watch
fine.
it.
The big deal about Steve McQueen, I really don't get it. Some of the stuff he's done, I don't think he's that great, but a lot of people are just, ooh, Steve McQueen, right? Ooh, his motorcycle, anyway.
Yeah.
Okay, so last week, now, we had a special trivia contest where the winner was going to get a 2-night stay at the Avalon Lodge in Lake Tahoe. So get this, okay, this is the first time we ever had something in Lake Tahoe. We kind of enjoyed this. This is in South Lake Tahoe. The Avalon Lodge, and the website is avalonlodge.com, and you can reach them at 775-783-1175. Love this. They have fireplaces in the room. Great amenities, most of them are complimentary, like a light and healthy breakfast, activity gear to use like bikes, kayaks, and snowshoes. That's
Wow.
fun. In every room, you get a French press coffee, and just steps to all fun, like walking to the lifts or the lake, or gambling, dining, and shopping, seasonal pool, and year-round hot tub. And I don't know if you go skiing, but when I go skiing, it's awesome if you can get a place where you just walk right out.
Oh, that's the best.
That
Yeah.
really is the best. So check them out, avalonlodge.com, 775-783-1175. And here was the question and our winner. Almost 1 out of 10 people have squirted this in their eye. What? And the answer was jalapeno pepper juice. And our winner was One-Eyed Jack.
Intentionally?
No.
No.
Just kidding. The winner was Sam in Saratoga. Okay, so Patty, we got an email from a listener that wanted to know, and we figured this is probably best for you. It says, how do you think the latest non-move by the Fed regarding interest rates will affect housing prices?
It is a good question, and one that people keep wondering about, but I have found that a change in interest rates don't make that much difference.
Okay.
And actually, this is what about a non-change? And in residential real estate, which is where I focus, people are doing it for lots of different reasons. It's a lifestyle change, a divorce, a baby, empty nest, or whatever. So they don't really necessarily base their decisions on interest rates. They base their timing on it,
Okay.
and sometimes a rapid change will make it, where they can't buy at all. But that's not really likely in the Bay Area.
Okay, so but
yeah.
basically then you don't really feel like the non-interest or the non-change in interest rates is really going to affect housing that much.
Yeah, I don't. And we're in
Fair
our
enough.
second selling season right now, and it's just picked up. And it actually took a little longer. So maybe, I hadn't thought about it until this minute, maybe that was it. People were holding back, thinking if there's going to be a change.
Yeah.
But if the general consensus is there's going to be a change in interest rates, generally they're going to go up, not down. And when that's coming, it spurs people to move so that, lock in now.
Because they're afraid that if they don't, interest rates will keep going up.
Exactly.
Yeah.
So that didn't happen at all that I could see.
Okay, fair
Yeah.
enough. Want to tell us what's going on in latest in real estate?
Oh, it's great. I mean, we've just picked up, and every single year when I look at year-over-year numbers, the market just keeps getting tighter. So when I did my numbers this week, looking at last year versus this year, we have a greater percentage of prices over asking.
Okay.
We have fewer listings, and all we have been talking about for 3 years is the lack of, quote, inventory. So we have even less now. We have fewer days on the market, and yet we have fewer sales. And I want to really be clear about the fewer sales, because what gets picked up by the media is that, real estate numbers are down because less properties sold this year versus last year.
That's a kind of an unfair characterization, though.
Yes, fewer sold because there's fewer on the market. Because if we have fewer days on the market and a greater percentage over asking, that's not a bad market. And what is also happening is the rate of appreciation has slowed down.
Yeah, it's sort of like when they say that we're in a surplus budget, and they go, no, we're not a surplus. They're just spending less negatively than they were before. So in
That's
this
right.
case, it's still increasing. It's just not increasing as much.
Exactly,
Okay.
exactly, and that's nice and healthy. I mean, there is some pushback by buyers where I'm hearing a lot from a lot of people. I think we're getting to a bubble here. I think we're getting to the peak. So there's a little pushback. It's also kind of the point where sellers are getting on the bandwagon and maybe being a little unrealistic.
Oh yeah.
So but we still have fewer days on the market and a higher percentage over asking.
And I have heard that a little more from a commercial brokers meeting that I went to, where but some of these sellers were getting so greedy that they just said, no, I know I'm asking this, but I want more. And then when they lost the sale, guess what? The price actually dropped.
Yes.
Be
And
careful.
what happens is when we start seeing properties stay on the market for a long time, buyers start doubting themselves, and they're like, I'm stepping out. There's a glut of inventory. Well, no, there isn't. We have some unrealistic sellers. So then whenever there's confusion in the air, that's when the market starts changing a little bit. So I think this fourth quarter coming up is going to really tell a lot about the future.
I think also, and tell me if I'm wrong, when a property stays on the market for too long, buyers themselves kind of wonder what's wrong.
What's wrong with it?
Yeah, is it just overpriced, or is there something wrong with the property?
Exactly. That's exactly right, and it's all price. I mean, let's just say it's worth $1.5 million. Would somebody buy it at $2 million? No. Would somebody buy it at $1 million? You and I would right now.
Yeah, even if it's got problems, you can fix it
Exactly.
within that price range.
So it's all price. So
All
if you
price,
put something $1.5 million on it, $1.9 million, it's going to sit there.
Gotcha.
Yeah.
Okay, very cool. I'm going to change the subject here for just a minute. Did you hear about, this is one of those pet peeves I have, is about silly, trivial class action lawsuits.
I hate that.
Don't you hate that too?
Yeah.
Okay, did you hear about the LinkedIn one? Did you get an email?
I got an email.
Yeah. So did you read it? This one I happened to read.
Okay.
And if I'm not mistaken, and please audience, correct me if I am mistaken, but the way I read it, okay, when you sign up for LinkedIn, you basically allow them to get into your folders, your emails, with their contacts to be able to invite other people. Okay, so you agree to that.
Yes.
And they can approach other people and say, hey, so and so, invites you to LinkedIn or whatever it is, right? So I'm thinking, okay, so where's this lawsuit coming from? Well, the attorneys, and I can't remember their names, decided it was inappropriate for LinkedIn to send a second email to whatever the contacts were. So you approved them to contact these people, I guess, via one email. But when they sent out a second email, that's got to be the worst thing in the world.
Yeah.
And so there's something ridiculous, like a $13 million settlement that LinkedIn agreed to, of which $3.5 million or so is going to go to the attorneys, all because LinkedIn was allowed to send one email,
Yeah.
but not a second email.
Yeah. No,
Did
was
I
it
read that
only?
wrong?
I did actually. Now that you're reminding me, I did read it. And was it only a second email, or I thought it was more than one, and they kind of hounded people? I'm not sure. But
Maybe,
what I
but-
do know about LinkedIn, and I have been embarrassed more than once as you just scroll through and click here. Yes, I'm agreeing to it, but I didn't know that they were going to immediately send an email to every contact in my address book
Gotcha.
to be my friend,
be your friend. Yeah,
or
so
whatever
to
I
speak,
am
yeah,
on LinkedIn.
content, yeah.
And I didn't like that. And of course I agreed to it, so I can't sue them. But
Yeah.
the way they do it, I think I wouldn't have asked a lot of those people, and for whatever reason.
I can appreciate that, and I think it's the same thing. A lot of times I just go ahead and scroll through and say, yeah, I'm fine with this, but okay,
Yeah.
maybe they shouldn't have sent one more email
Yeah.
or whatever, but gosh, a $13 million settlement and the attorneys to get almost $3.5+ million for that. To me, it's like, come on. I mean, they're not. It's not like a PG&E basically hiding the fact that they're contaminating the water.
Exactly.
They're dying left and right. I mean, that's different. I don't know. That's just
I'm pretty sure each and every one of us gets an email at least once a day on that we don't want. Like
Yeah,
maybe
exactly.
1,500.
Yeah.
Yeah. So there's not a lot of damage.
Yeah, and I hate those scam ones. Those to me just drive me bananas. Okay, we're going to cut to our third and final commercial break. Here's, again, classic trivia from classic films. Small town boy meets small town girl. They fall in love. They decide to rob rather than work. The male lead also produced this well-rewarded film. Name the film. The first caller with the correct answer wins a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer that question. Stay with us. You're going to be listening more to The Best of Investing with Edward Brown and Patti Cohen because Mark is off for the rest of the day.
All right.
Okay.
I do have if there's time, one other thing to talk about.
Fun with Dick and Jane. Did you ever see that
You're just
one?
going to have... I did see that.
God, that was a good one. Did you
That
see
was
that?
fun.
I
They
think I
did the
did.
remake.
Oh, that was
Long time
so
ago, right?
funny.
Yeah.
That was pretty funny.
Yeah.
And the remake was not bad with Jim Carrey.
I
It was okay. But the
like,
first one-
yeah, after seeing the first one.
Jill St. John? Yeah.
Fonda was
Fonda, yeah.
great. And I forget who he was, but he was fantastic too.
I love comedies. Sometimes it's just too much in a day, and you just want to
Yeah.
get some popcorn and laugh.
Yeah. That's right. It's funny. I really got into Everybody Loves Raymond.
Oh,
And, I mean, some of the stuff there is just, like the brother is taking off his shoes. He got big feet and they
Yeah.
smell. And he goes,
Patty from Seinfeld. You probably like Seinfeld.
oh, I
You
love
like Raymond.
Seinfeld too.
Yeah,
Seinfeld
He
was
says,
great.
love that.
he goes, smells like a skunk that came out of the ass of another skunk.
Exactly. So you have got that New York humor.
Oh,
Me
yeah,
too.
of course.
Yeah.
All right. Let me,
So I have one more thing to talk about. There's like cool ranch in Napa that's on the market.
oh, okay.
And in PB, it's kind of sexy. People like that. Whatever.
Okay. So let me. Okay, that's going to be a very short one. 3 minutes.
Okay.
So we'll let you talk about that.
Okay.
We'll be done. All right. Ready? And away we go. Welcome back to the Best of Investing. Edward Brown here along with Patti Cohen. Trivia question. Small town boy meets small town girl. They fall in love. They decide to rob rather than work. What's the name of the film? Bonnie and Clyde.
Bonnie and Clyde.
Bonnie
Oh,
and
okay.
Clyde. Okay. Comes with Roy Beatty, right?
Yes.
And Faye Dunaway?
Faye Dunaway.
Boy,
Yes.
I tell you, my Alzheimer's hasn't kicked in yet. Okay, now, Patti, before we cut out of here, do you have an interesting property you want to talk about?
Oh, I have never been so excited about a property that is coming. It's not yet on the market, and I can imagine so many listeners have a vision of one day having, a vineyard in Napa. I've got 82 acres of prime real estate in Napa, and it's got a gorgeous home rolling hills. You can see views down to the Bay Area and Mount
How
Tam.
much?
And it's really, it's 2,900,000. That's really not
pretty
bad.
low for all that.
And I didn't even tell you that Regina, that's where they produce Regina oil. And Regina oil, olive oil,
Oh.
is not that well known because it's only available in really high-end restaurants and grocery stores in Napa County. And they grow grapes, really good
So
grapes.
you can actually make some of your money back by selling the grapes.
Exactly. And you know, for the people that have this vision, oh, wouldn't it be nice to own a vineyard someday,
Yeah.
have a second home? You've got a guest house, an amazing home, pretty amazing. It's 2,900,000. It's not on the market. If
Okay.
you are interested, it is my listing.
Okay.
Definitely call me at 415-722-4842, Patti Cohn.
Wow, that sounds pretty exciting. I like that one.
Yeah,
Okay, maybe we'll have to.
maybe you're gonna buy it.
Yeah, I was gonna say. I always want to have my own wind vineyard. Okay, so now we're gonna cut to our hockey thoughts for the day. Gordie Howe said, "All players are bilingual. They know English and profanity." And Gil Peralt, and I don't know who that is, but he said the 3 important elements of hockey are forecheck, backcheck, and paycheck. All right. Tune in next week to The Best of Investing. We're going to be giving away more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing.
Woo! Yoo-hoo! Well, I like it that way. I like it. It's nice and short.
Nice and short.
I mean, it's double work for you, but I wish it was like this every time.